Vinay, can we go to the presentation?
Yeah, can you share?
I'm sharing.
Yeah, please share the presentation. Yeah. Friends, if you have any questions, you can start posting in the chat box and we'll take up the questions at the end. Please do not, or in between, we also would like to touch those questions. If it is part of our presentation, we'll try to include those things also.
Are you able to see the screen?
Yeah.
Okay. You can do the summary. Vinay.
Yeah. So as you know that like this is a central act, and generally in every presentation we would like to give the bigger picture of what's happening across India on this act itself. So as of today, 31 states have introduced and also established the authority and also respective regulations. The recent one is about the West Bengal. West Bengal, they appointed the authority in the month of January and started functioning. That is the latest one. Of course, prior to that, Jammu and Kashmir was the prior to the West Bengal. And also most of the states have the permanent authorities, except interim. About 6 states have the interim authorities. So as of now, there are projects. We know that there is a projects registration, a real estate agent registration. We have crossed 1 lakh mark of the project registration. Apart from that,
about to cross about 94,000 real estate projects are registered and 70,000 real estate agents. Of course, we have more number of complaints. Yeah. Yes, Vinay, carry on.
As of today, that might have crossed 1 lakh also. This was the last statistics which we had. Latest update would get in another 3 to 4 days. It's a monthly publishing of information from the central government. This was the last update. Of course, now I think I'm sure that this would have crossed 1 lakh as of today, but in absence of information, so we considering the latest available and sharing the same. And also the complaints also have been disposed. It's a complaint disposed by the authority. It is not the complaint filed. Complaint filed is far higher, of which only about 30, 40, 50%, less than 50% of the complaints are disposed by the authority, which itself is about 1 lakh plus. Next.
Okay, I think before that we need to, okay.
Yeah. So we try to give some input relating to the Karnataka RERA, which includes one of the a new introduction of the Form 7, that is the annual audit. I know that this, even though it has introduced or implemented in the last November, multiple extensions are given by the authority to report in the new Form 7, because new Form 7, the annual audit of accounts is a very exhaustive one, which require more effort by the promoters as well as the professionals before certification. Is a large information required, and for the 2022, there is a further extension of the time by the authority till March 23. And I'm sure that authority various representations also received as recent as about 10 days back by the industry representatives. The authority is also considering the further extension of time for another 1 or 2, 3 weeks. We are awaiting for the further extension notification based on the representation of the various industry bodies and the promoters. And next is in terms of the model form of allotment letter, even though this has been notified about 6 months back, but we keep getting the inquiries, we keep getting the messages or the queries, how mandatory this model form of allotment letter, which is notified, which is just hosted in the website, and should be serious about this allotment letter, which is hosted in the website. So that is the one common question. Wherever we go, we keep getting it. We'll address to that also. And exhaustive registration documents. Hope friends, many of you are experiencing that the registration with the Karnataka RERA. Of course, for any other RERA is also, it's a detailed and exhaustive information. And as per the checklist which is made available on the RERA website, about 123 number of documents, 123 documents are required for somebody to file an application with RERA for obtaining the project RERA registration. And we'll also see that why it is important and was that not mandatory earlier earlier. Answer is earlier also it was mandatory. If you read strict reading of section 3, section 4 and rule 4, it was mandatory earlier also, but it time taken by the authorities or the stakeholders were considered as a little, they were considered in the initial days as lenience because the act being new, and now act is fairly understood, adopted, accepted, and also many of us become the master of this act itself. So authority wanted to follow it in a stricter way as per the act and the rules without giving any room for the without any room for the compromise or making this as one more registration. Then agreement for sale, also it's a mandatory form which is notified in 2020 by way of that, and also a recent various recent judgment by the various authorities also have given and made it further mandatory, further make it strict in terms of following the agreement of sale format which is notified by the authorities. And of course the case also before the Supreme Court talking about buyers and builders agreement, and the Supreme Court has given the mandate to the central government to strictly implement this buyers and builders agreement in a uniform manner across state. We'll also see that as of now, what is the status, how authorities are also insisting that, and further that in 2022, Maharashtra RERA has come out with a stricter notification stating that in agreement of sale, some of the classes are non-negotiation classes. Those classes, there is no compromise, there is no modification is permitted by the authorities while drafting this agreement. And in case if the draft agreement beyond what is permitted, then those classes wouldn't be of any valid, and which is void at the ab initio, which is further evidenced by the registration certificates which are issued or granted by the authorities, including the Karnataka RERA. If you see strictly, the registration certificate has a clause that if the format or the conditions or the clauses of the agreement of sale as notified is not complied with that, then those agreement also has become void. So to that extent, authorities are also keeping eye on this agreement of sale and also insisting the promoters to follow this. Next. Suhail, next. Yeah. And would also like to mention that Karnataka government has notified the regulations. So you may have a surprise, what is this regulation and why this was not notified. If you read section 84 of the RERA Act, it is mandatory for the government to appropriate government to make rules as well as the regulations thereon. And many of the states have formed or notified these regulations well in advance in way back in 2017 or 18. But Karnataka had, for whatever the reasons, this was not implemented. So without implementation, this authority was also functioning based on the internal memo or internal decisions they have taken. Now in 2022 October, state government, Karnataka state government has notified these regulations also. We'll go through these regulations, classes in the regulations, which are very important for the professionals as well as the promoters. Yeah, Suhail, next.
Yeah. So just to add to what Vinay said, of course, these regulations had to be in place at a much earlier stage. But it took some time for the Karnataka government to approve these regulations. So by way of this notification dated 27/10/2022, the regulations have now been notified, and basically the regulations govern how some of the procedures that are to be undertaken by the regulatory authority. So we'll briefly discuss what are these as we move forward. So you want to do this, Vinay? Regulation 3.2?
Yeah. So we'll take up the regulation part to start with that. And in the regulation, why it is important is this regulation covers the various aspects of the RERA. Either two, you are following it, and without regulations, the formats were notified, and now that they're confirming by way of this issuing these regulations. So we all know that there is a Form 7. Form 7 is nothing but the audit report formats for the audit report format for the chartered accountant for annual audit of accounts. So regulation 3(2), where authority has notified this Form 7, wherein a chartered accountant has to issue a certificate in the Form 7, and while issuing the certificate, the chartered accountant should reveal that any certificate issued by a chartered accountant, project architect, or project engineer has false or incorrect information, and stating that the money which are collected are withdrawn, which is not in commensurate with the project development work, and authority has the right to take action against those promoted under the Act, and also issue a notices to the respective professionals. So this has a far-reaching impact on the professionals also, where professionals do not do the work or do not do the collect the information or the documentation or the certificate from the respective professionals or the statements from the bankers or otherwise, and issue the certificate tomorrow. If it come to the notice of the authority that proper or required steps were not taken while issuing the certificate, then that becomes a challenge, and also notices may be issued by the authorities. In earlier sessions also, we have shared a few instances where authorities were issued the notices to the architects, to the chartered accountants. Show cause notices were issued asking them to come and explain in terms of the basis of the certificates were issued, and also evidences to substantiate the certificate. And in our experience, the couple of instances where authorities were called, the respective professionals were failed to satisfy or failed to convince the stakeholder which include the RERA authorities, and also the complainant filed the complaint, and other stakeholder, one of the stakeholder was the banker also as part of the transaction or the complaint. So again, we insist that while issuing the certificate by the professionals or promoted to prepare the draft professional certificates, please ensure that all are backed up, all are supporting with the documents. Do not compromise on issuance of the certificates. Friends, recently you have seen a couple of cases. Our professional institute has been taken up as a disciplinary matter. You know that the coffee day auditors were audit firm has been debarred. Chartered accountants are penalized, including the as latest as DHFL auditors. So considering that, my recommendation, strong recommendation, is do not compromise on while filing this while issuing these certificates. A simple reason which I say is the certificate which you are issuing on behalf of the promoter to the authority. However, the big stakeholders are your customers, or the buyers, or the lenders, or the vendors. If something which is not correct, the first person who will hold you responsible for issuing the certificate may not be the authority. In many a time, the customer or buyer will hold you responsible for issuing the wrong certificate. So considering that there are many eyes, there are more observers for your certificates. Next, Suhel.
Yeah. So By way of regulations, of course, the authority under Section 35 is empowered to investigate into the affairs of a promoter or a real estate agent. Now, in the regulations also, the power to collect information with respect to a project from a promoter is also notified. So, by way of Regulation 14, the power to issue directions for the purpose of collection of any information, particulars, or documents that the authority may consider necessary in connection with discharge of its functions has been now notified by way of regulations. So what this means is that, though of course even earlier directions were given by authorities for submitting information, but by virtue of this, any information that the authority deems fit, let's say that a complaint is filed under Section 35 as against by an allottee as against a promoter. In such proceedings, the authority can now seek for any information, which could be financial information or otherwise. So when such a direction is given, then it will become mandatory for either it could also, such a direction could also be issued to an allottee or a real estate agent also. So when such directions are issued, then it will become mandatory for the person to whom such directions are issued to submit that information. Next is the investigation. We have seen in the past that the authority has, by way of investigation, not only inspected various projects, but also has directed submission of various financial documents relating to the project. This is again what has been done by way of the regulations under Regulation 15, is that the authority would either direct the secretary or any other officer or person as the authority considers appropriate to study, investigate, and furnish information with respect to any matter. So it also empowers the authority to issue any other directions which it deems fit from time to time, which within which the report is to be submitted. So by way of these regulations, the authority is only enlarging its powers under Section 35 to conduct investigation in respect of the affairs of a promoter or a real estate agent or an allottee. So this gives now the power to the authority to issue specific directions.
Sunil, you can elaborate about that couple of examples, practically how this investigation, what happened. Say an example in one of the larger project where some of the complaints were filed by the customers on various grounds, which including usage of the residential project for the purpose of commercial exploitation or commercial project without taking prior approval of the consent of the customers, wherein authority has deputed their engineers to the site to investigate, verify, and give the report thereon. I'm sure in couple of instances, even where authorities were also visited the site of the promoter to understand status of development of the project. So with this regulation, it gives much more clarity to the authority to make and also to appoint other officers to investigate on the project or the agent.
Yeah, like Vinay said, in fact, the chairman and both the members, the earlier members, have inspected some of the projects in respect of which there were large scale complaints which were filed by the allottees. So the authority consisting of the chairman, the members, as well as the engineering staff, all of them have inspected the projects. And in furtherance of such inspections, in fact, reports have been submitted, and those reports are placed on record in the complaints, and the authorities proceeding with conducting those cases. So this is what it implies to say that collecting of information and the investigation. Next is 1 minute. The RERA bank account. Would you
Friends,
like to?
you all know about the RERA bank account, and this is not the first time you may be listening to this. Earlier, we had various circular or notifications which were issued by the authority from time to time, which may include your bank account direction, RERA bank account direction 2020. Now, all those multiple circular, multiple notifications were issued by the authority is capsulized and is captured and have brought under this RERA bank account RERA bank account under regulation 29. You all know that there is a RERA require a project designated bank account, one bank account for each, separate bank account for each project. So similarly, they have brought in, and also they have given clearly that how the name and the style of the account for the respective project. You all know that it should contain the name of the company, that is a promoter, and also mention as a RERA designated account for the project. So it has a RERA designated account should character should be there, promoter name should be there, and the project name should be there. That is how it has been built. I'm sure that most of the bankers have already understood this concept and implemented that. And they clearly mentioned that in case of any of the account which is open, it should be a no lien account, because where authority also experienced that many of the promoters are opening the fixed deposit, and against the deposit they are taking availing the OD facility. So they made it very clear that these accounts are no lien accounts, and which should be a free account. The 70% account should be free, and the entire money of the 70% intent is, as per section 4.2 LD, to be used for the purpose of project development. So each project shall have one RERA bank account, and in case of the there is an obligation between the promoters. The promoter should have proper documentation to operate this bank account. Friends, you all know that RERA require the project-wise registration. It's not the promoter-wise registration. Each project, each RERA registration, and each RERA registration has only one bank account, unless Maharashtra has multiple bank account permission, where builder has one account, landowner has one account. Goa also permit the 2 bank account, but in Telangana, Karnataka, Tamil Nadu, and Kerala, only one bank account is permitted. And this one bank account is the project bank account. Entire collection of which 70% should come to this project bank account. That is the intent of the law also, because nowhere it says that multiple bank account. So in case of a area sharing model under RERA, landowner is one of the party where if he realize the money, that money also should come into this project bank account. So in order to have smooth functioning and smooth deposit and withdrawal of this account, so principal promoter is nothing but your generally a builder should have proper legal contractual agreement between other promoters. In case of multiple promoters, they're generally a landowners, and should also brought him to the knowledge about it's a single account, and there should be a proper arrangement for the purpose of deposit as well as the withdrawal of the money from the project designated bank account. Next.
Yes, Vinay.
Next.
One moment. Yeah. So,
also, this is about the reporting. I need not to talk much about this reporting. About regulation 29 of subclass 4 talks about reporting. In the form 4 is a CS certificate, form 5 is an architect, form 6 is a chartered engineer certificate, form 7 again it is the annual audit of accounts, which we fairly know that. And let's move on. And there is no much to be elaborated, but except what is I mentioned in the red color. We keep hearing from the authority that many of the promoter or professional fail to upload the RERA bank account. So bank account statement along with the CA certificate. Friends, you all know that RERA bank account direction issued 2020, which is made it clear that every promoter shall upload this RERA designated bank account along with the CA certificate. And apart from that, they also say that now, in case if you're keeping the money in a fixed deposit, please add the fixed deposit also, fixed deposit statement also as part of this. So in view of the same, so it is very important for the promoters as well as the professionals to upload this statement in the quarterly progress along with the CA certificate, wherein authority will ensure, also verify that money has been collected, is deposited into this bank account, and also has been withdrawn in accordance with Section 42 LD of the Act. Next.
Yeah, just to add to what Vinay was talking about the bank accounts, we often see that whenever we file applications for either extensions or modifications or something else, that is when we find that the promoters would have already changed the bank accounts and would not have deposited all the money as required under Section 42 LD into the designated project bank account. And some of the chartered accountants also would have certified that would have gone ahead and issued the certificates without qualifying the fact that the bank accounts have been changed. So this is something that the chartered accountants also have to keep in mind, and also the promoters have to make sure by way of these regulations also a little ahead. Now of course, for change of bank account particularly, it is a prior permission which is required. So perhaps we'll have to now see how the authority is going to consider when bank accounts are changed without taking this prior permission. So you have to make sure that the money is deposited into the same account and no changes are made. Yes, Vinay, you can go take them through Form 4.
This Form 4, this is again
I don't think there's much of change.
Much of change is not required. You can go. But only thing is one note which I wanted to mention, that friends, I do not know how many are completely exercising your knowledge on RERA or understanding importance of RERA. We often hear, at least in the complaints, during the complaint procedure, that they say that money is not deposited into the RERA account properly, or 70% is not deposited. So we often hear that, and knowingly or unknowingly, there is a certificates are issued by the chartered accountants, and that making difficult for the advocate of the respondent to response to the queries or the allegations, or maybe the facts which is brought in. So while you certify, please ensure that money deposited into the RERA bank account, and also in case if it is not deposited, please mention as part of this, as part of it, without much leaving the fact of not depositing. Qualification is very important in case if it is not followed. Yeah, next.
Yeah.
Next.
1 minute. Yeah. Next is the annual audit submission. This is the go ahead, Vinay.
Annual audit, like as I told you, it is introduced in the November, and they say that original due date for submission of the obtaining of the RERA audit certificate in Form 7 was the 30th September and to be submitted within 15th October. However, due to notifying the new Form 7, which is a very detailed one, so they have extended up to from 16/11 to the 15th January 2023, and further again they have extended based on the representation received to the March 23. Next. So this is a January, and they subsequently they have extended up to March 23. So with this, there are various important aspects to be considered while filing this Form 7. They say that you have to upload the audited balance sheet of the promoter. That is what is everybody end up with uploading, but authority or the act looking at to upload the project-wise balance sheet, project-wise P&L. So if the entity having a multiple businesses or multiple projects, and authority may not able to look at what is the status or what is the net worth or the profitability of this project. So that is what is making them difficult. But however, this being the first year of new Form 7, they end up with accepting the entity level also, rather insisting on the project level. Remaining is audit report, income tax return. This is invariably would be available with the promoter, and the same thing can be uploaded. Next. And this Form 7 has a multiple tables, table A to table F, and a few of this table is the replica of the Form 4, which is the quarterly CA certificate. You should appreciate how this Form 7 has been flown, like start with the expenses incurred and the money collected, money deposited, money withdrawn, and money utilized. And having said that, what is the liability on the project? So that like authority would know that like this project has a positive net worth or positive flow of the cash or the funds to complete and hand over the project to the customers. So that is the intention of it. And very interestingly, the details which are provided, which are seeking or asking by the authorities are exhaustive, and promoters should look at that how you capture this information at your accounting level itself rather than to sit and bifurcate at the year end. So look at that how you start capturing this information where you can extract the same easily for the purpose of reporting. And one of the important aspect is these things you can pull out, like what is a collection, what is the deposit, what is a withdrawal, what is the liabilities of the project you can take from the books of accounts, and liability towards the bank borrowings also you can take it. But what is table F talks about liability based on the orders of the authority as well as the appellate. So this is a little tricky one, which require more efforts by the professionals as well as a promoter. In case any orders which are passed by the authority, the orders may be multiple things, multiple types. One is related to the project, and another is on the complaint basis. In case any orders passed against the project for non-submission of any quarterly updates, delay in filing the earlier Form 7, or penalty for delay in registration, penalty for non-compliance of Section 3, 4, or 14, 15, whatever may be, those things are all the liability on the project. Apart from that, other liabilities also include in terms of the delay compensation based on the orders passed by the authority. So how do a professional certify that? Where is the data for the professionals? How do I ensure that I certify the proper value and the quantum of the liability? Is a challenging one. Even we face the challenge. How do I take this? One simple solution to it, the data which is available on the RERA website. That's the best part of it. If you go and fill the details about the project RERA registration number or the promoter name, you will get what are the complaints which are filed by the various customers or the allottees in the project. And you can also see the status of it, whether it's under progress, in process, hearing, or it may be disposed. Maybe the disposed one, we should go and check that what happened for the disposed and what is the order passed by the authority, which is a favorable or the adverse order. In case of adverse order, any financial liability on that. So this is the how it has to be captured, and that information has to be brought in this certificate.
As regards the appellate tribunal, of course, currently the data is not available online. Perhaps you'll have to ask if you are a promoter, then you'll have to give the information to the chartered accountant to certify this in the Form 7. Or if you are a chartered accountant, perhaps you'll have to ask the promoter to give this information specifically, because what happens is when the regulatory authority passes an order in an appeal, the appellate tribunal either would have modified the order or confirmed the order or set aside the order. So if it is pending, then what you will consider is the order that is passed by the authority. If any of these three, if it is disposed of by the appellate tribunal, either by modifying, confirming, or setting aside, then those things you can take into consideration. So which means that when you're taking the data from the real estate regulatory authority, you should check what has happened in the appellate tribunal. Now, because the appellate tribunal, for filing the appeal, 100% deposit has to be made for filing the appeal. That is, whatever is the money awarded, if it is an order where money is directed to be paid either to an allottee or vice versa, when an appeal has to be filed by a promoter, then 100% of the money that is awarded, that is, if it is a refund order, the entire advance that is paid and the interest that is awarded to be paid, all of it has to be deposited before the appellate tribunal for you to prefer an appeal if you're a promoter, while an allottee can file an appeal by just filing rupees 5,000. So this is the requirement. We don't see many appeals being filed. Of course, um, um, of late, when this thing came to be confirmed that 100% has to be paid, the number of complaints had come down. Now slowly that is also again going up. But yes, these things also have to be taken into consideration to fill table F. We'll go ahead, Vinay.
Yeah, this intention is for the authority to know the viability of the project in terms of the financial strength to complete the project. So, okay, these are all the contents of this Form 7 and also documents to be attached along with the Form 7. Next. Of course, this is the next. These notices were sent to.
These are the notices that are being sent to the promoters for filing the annual audit in Form 7. And as I know, some of the promoters have already filed the annual audit in the earlier Form 7, isn't it, Vinay?
Yeah.
So those promoters who have filed in the earlier Form 7 are now being also asked to file in the new Form 7.
Yeah.
So that is something that you need to keep it in mind and see whether you have the your annual audit is done as per the newly notified Form 7 or the earlier Form 7. So these are the notices that are being sent. So 1 minute. Where is... So there is something. 1 minute. I'm not getting. I'm missing some of the.
What is it?
No, the model form of allotment letter.
Yeah.
Some of these slides are missing. So, of course, the new the authority has now notified, or should I say, published a model form of allotment letter that all promoters have to use while allotting a unit. It could be a plotted development project, in a plotted development project, or in a apartment project or otherwise. So you have to make sure that you use the model form of allotment letter while the allotment is being made. All the terms of the allotment are detailed in that, including the amount of advance that is being received, the unit being allotted, and all of that is to be captured. What additionally has been done, which earlier was not being insisted upon, is by way of Annexure A. Now the allotment letter requires that the stage-wise time schedule of completion of the project is to be given to the allottee also. This is part of the section. This is section 11. So section 11.3 requires that stage-wise time schedule be given. So now this has been brought into the model form of allotment letter. So what it ensures is, one, we give these details are generally given by the promoter during, I think, earlier now while registration itself, the basic stage-wise time schedule is given. This now has to be disclosed to the allottee also. So this could also get linked with the payment schedule. So while the payment schedule is incorporated in the agreement for sale, now when you give this stage-wise time schedule in the allotment letter itself, the allottee or the purchaser would have a basic idea as to when these things are likely to be completed. So of course, what happens if you don't adhere to this is another question, because that is still new to this whole thing. Though the act required that the stage-wise time schedule be given, however, this had not been done. By virtue of this Annexure A to the allotment letter, which is now published on the website of the authority, this has become mandatory. So the promoters have to keep this in mind while issuing the allotment letter, and also this may also have a bearing on the agreement for sale that is to be entered into and the payment schedule. So this has to be taken consideration of while planning the project as well as
cash flow.
making promises to the allottees. Yeah.
Yeah, example, earlier we used to take about 25%, get into a sale agreement itself, and sale agreement entry, if the status of the completion is not to an extent of 20 to 25%, then it becomes difficult for somebody to raise the money of 20 to 25% at the allotment letter stage itself without completing the necessary work at the site.
Okay, next is the agreement of sale. The importance of it, as Vinay earlier quoted, that the Honorable Supreme Court also required that a uniform contract, that is a uniform standardized agreement for sale across the real estate industry and for the entire Union of India, be notified. Of course, that is being now explored. We don't know how much time that is going to take. Nevertheless, the agreement for sale, what has to be understood is that there may be a transaction where 100% of the money could be paid upfront. It still becomes necessary, or it is desirable, to enter into an agreement for sale separately, even if it is the same day, and then execute the sale deed. Because it is in the agreement that the obligations, the mutual obligations between the promoter and the allottees are set out, and everything related to the project, what is promised to be done, or what is everything is captured in the agreement for sale. If a particular thing has to be enforced either by the allottee against the promoter, or vice versa by the promoter against the allottee, it is this agreement for sale that you will rely upon, because with the sale deed everything concludes, but with the agreement the obligations are set out in the sale agreement, and that is why the entering into an agreement and the form of the agreement is very vital under RERA. So some of the provisions that relate where the agreement for sale is spoken about under the act is, one is the section 2C, which defines the agreement for sale itself, which says that the agreement, it is an agreement entered into between promoter and the allottee. Now section 42G requires that the pro forma of the allotment letter, agreement for sale, and the conveyance deed proposed to be signed with the allottees to be uploaded while registering or making an application for registration of the project. So as I'm sure many of you who are promoters would know that for all your projects, you would have uploaded these three documents, that is the agreement for the allotment letter, agreement for sale, and sale deed. Now in Karnataka, we have a model agreement allotment letter, and the agreement for sale has also been notified by way of Rule 8A in June 2020, in June 2020. So both these are now available on the website of the authority. You can only add details which are relevant to the project. You cannot extensively modify the agreement for sale. You will have to use all those, use the form that has been notified. If any modifications are to be done, such modifications should also adhere to the provisions of the act. You cannot have, like, let's say that the act stipulates that no modification can be carried out in respect of the sanction plans. You cannot, like earlier, the right to modify used to be retained by the promoter. You cannot change that to say that the promoter can modify the building plans without taking consent of the allottees as required under section 14 of the act. So these are the things that have to be kept in mind. And section 13(1), which basically says that in every transaction where real estate is sold, where a unit is sold, be it a plot or an apartment, that if any promoter has to accept more than 10% of the total cost of the project, then a promoter shall not do so without first entering into an agreement for sale with such person and register the said agreement for sale under any law for the time being in force. Of course, there are I would say, differences in opinion when it comes to the registration aspect of the sale agreement. But our view is that a sale agreement, when it is entered into in respect of a unit, it should be registered, which is what is mandated under RERA. Just to give you a comparison, this was also the requirement under COFA 1972, that the sale agreement, when a promoter enters into a sale agreement, it should be registered. So if you take that view also, when COFA itself had mandated, the RERA, which is also a regulation, and if you see the provisions of COFA and RERA, many are similar provisions. So even taking that into account, what has to be done is the agreement should be registered. It's not that an unregistered agreement is unenforceable either by the promoter or the allotee, but let's take a scenario when there have been cases where now of late, in fact, many promoters are filing complaints against allottees where the allottees are not coming forward and making payments as per the schedule of payments. So many a times we ourselves have seen that they enter into agreements and then they vanish. They're just not there. So it takes even after 2-3 years, the allottees have not come back, not made any further payments while the registrations, while the agreements have been entered into. So when a promoter has to seek for cancellation, or seek, like an allotee can seek for compensation by way of payment of interest on the delayed payments, a promoter can also seek for similar compensation when a complaint has to be filed. At that point of time, if section 13(1) has been violated, then the promoter may not be able to go against the allotee. So that is why it is important that adherence to this section is there, and the agreement of sale is entered into and registered. Section 14(3), of course, deals with the defect liability. Now, in the sale agreement also, it is now written into the sale agreement that the defect liability would extend up to 5 years. And 18(3) is with relating to the compensation.
Suhail, I'll just take up this defect liability.
Okay.
A couple of practical recent cases wherein it has become the practice of the promoter to hand over the common areas at later point of time, having maintained by them for a couple of years. Generally, friends, the individual apartments would be handed over once the work of the individual units are completed. But when it comes for a common area, maybe a lift lobby, staircase, common areas, or maybe clubhouse, they would like to retain for some more time till their last sale or last unit is disposed, then they will transfer to the association. And it has come to the notice of the authority that if the cases are like that, then the customers or the allottees insisting that we want 5 years from the date of the possession of these common areas to the association. So there is it's a very tricky one in terms of this, because the promoter is maintaining on behalf of the individual customers for the various reasons, because practically in case of a larger apartment complexes, it can't be immediately hand over to the association, and there is no much participation by the allottees as part of the association. It's more of an obligation to any of the customer or allottees to part of the association and manage it. And all of a sudden, if it is comes to the association, and it's become difficult for them to manage also. However, the defect liability talks about 5 years from the date of on the one side it talks about date of occupancy certificate, and other side also it talks about date of handover of the possession. So this becomes very difficult to draw a line, and of course this can be taken based on real fact of the case. What is the defect, and was the defect was present even prior to the willingness to hand over. So that is a very important aspect. There are bigger and there are much complaints are filed on this defect liability also, which has a 5 years of time for the promoter to address to it. Next is 18.3, which is more about the compensation, like wherein allottees or the customers has having a right to claim for a compensation if there is a breach of the agreement, or in case of obligations of the promoter are not met, or not whatever be the terms of the contract, which is nothing but agreement of sale, which is not met any part of it, and liable for the compensation, which generally include the delay in delivery. Across India cases, if you say, the majority of the complaints are filed for the delay in delivery of the project. At least about 90% of the cases which are filed are delay in delay in delivery of the project. So that would be the one bigger mm, uh, cash flow or the liability on the promoter. So that would be the one breach also. Yeah. And friends, many of you are sending the messages, direct message to me or maybe to the Suhail, and very relevant questions. Many are you asking very relevant question. I'm just trying to reply to them, to your messages. And I recommend that you can post it to everyone so that everyone will also get benefited out of it, if you are comfort to do that. Okay. And very specific or personal questions of your client. Yeah.
Yeah. So
This is a terms of the agreement in terms of the uh, uh, this is 11.4a, which is of the all the responsibilities, all the obligations under the act has to be met. Okay, including common areas and the associate transfer of the common areas to the association. 11.4h has a very important thing in terms of the after creating the mortgage.
no, after entering into an agreement for sale,
Agreement for sale, mortgage should not be created on the land. See, it is so
with
happen. Initially, the promoter may not have a willingness or intent to raise any money on the project, considering that I can sell it without any of the borrowings. But subsequently, if you wanted to borrow something, then obviously he will create a charge or mortgage on the entire land. So if so, then this 11.4h bars the promoter to hypothecate, mortgage, or create a lien on the project once the agreement is entered or once the transaction with the customers are made. So generally, promoter or the banker will take care of it. They say that you have to give me the what is a sold apartment. Except that sold, they will create the mortgage. But in order to ensure this 11.4h is properly followed, properly complied with that, so a little suggestion or advice also required to be given to the promoter. Declare properly about the sale or the sold unit or agreement entered by the customer with the customer while they raise any loan or mortgage the property. Suhail, is that correct?
yeah.
Yeah.
This also finds mention in the model agreement for sale. So the form that is notified. So basically, what it implies is that even if a promoter, after having entered into an agreement or allotted the unit, mortgages that unit, even the financial institution would not get a right over the mortgage created itself will become vitiated. So that is what this implies. So if any promoter does mortgage the unit after having entered into the agreement for sales, and then even the financial institution would not be able to execute it as against that apartment.
Yeah.
14.3 we discussed, and section 19.6 is by virtue of which where the promoter gets a right to go against the allottees. This is the section which we use when an allottee defaults in making payment. So this mandates, section 19 deals with the obligations of the allottees in respect of a real estate project. So this section 19.6 requires that every allottee makes the payment as per the schedule in the agreement. So if the or whatever be the charges that are required to be paid as per the agreement by an allotee should be paid. So when this does not happen, it gives a right to the promoter to file a complaint. So this is what is unique about RERA. It does not just protect the interest of an allotee, but it also aims at protecting the rights of a promoter in case an allotee defaults in doing something. So which this power, of course, was not there earlier. The only possibility could have been enforcing it by way of initiating either by filing a suit for specific performance or going under Arbitration Act. Now with this, in fact, the complaints, the moment, what generally has been our experience, that the moment a complaint is filed, the allotee either comes forward, settles the matter, or pays the remaining money along with interest or whatever be the settlement. So this is hastening or making the process faster when it comes to a promoter wanting to recover the money or recover the money which has remained unpaid, or if a cancellation has to be done, that cancellation is to be done. Yes. So Vinay, you've what you want to say here, you can say.
As I mentioned that various classes, this is a summary of what we have discussed now, wherein there are non-negotiable clauses in the agreement of sale, where authorities are very clear that it should not have diluted, because in many a case the promoter come back and during the complaint we already mentioned in the agreement about the defect liability. They say that defect liability is only one day, one year or 5 years. They add various other clauses stating that if it is due to so and so reason, the defects are not covered, not brought to the notice of the promoter within so and so, not covered. Like that, in case of a defect liability, in case of a cancellation of agreement, will forfeit the entire booking amount. That is what law talks about. They say something else. So various classes which are negotiable, which is not negotiable, is what authority trying to say. That please read the certificate which is issued by the authority also, which is very clear that in case of any clauses in the agreement of sale is not followed, then that agreement itself is a void, or clauses of
No, the clauses, it is basically, this was in fact recently included, where the authority said that if any clauses, because while applications for registrations were being reviewed, and particularly at one point of time, the authority went into how the agreements are being drafted and uploaded. So a lot of project registrations were withheld because the agreements that were drafted and uploaded did not meet the requirements of the Act. So when this was being done, a lot of time is being lost. So it is at this juncture that the authority simply added this in the registration certificate, saying that if any of the clauses you now, in fact, the checking of the form of the agreement for sale is not being done. So a promoter cannot be happy that whatever I've uploaded has been approved. So it is not so. It is because this particular condition has been included in the registration certificate recently, to say that any clauses in the agreement for sale, possession letter, allotment letter, which is not in accordance with the Act rules and regulations, are void ab initio. The possession letter has come in here because some of the projects, while handing over possession, some of the allottees were drafting or making possession letters in such a way that they aim to take away all the rights from the allottees. That is a blanket acceptance of what is being delivered, and in some of the cases, in fact, the rights are all laws that are accrued to an allottee, and under all laws were sought to be taken away, waivers were being made. So because of that, possession letter has also been included in the registration certificate. Okay, quarterly updates when to be filed. So Vinay.
So we know that the promoter shall comply with the function duties of section 11 and the quarter supply within 30 days end of the each quarter. This is one of the certificate which is issued by the authority.
This is in the certificate, no registration
certificate in the registration certificate. However, as per the rules, it talks about 15 days only. Just this is what is we observed it, we are sharing it. However, now you go back and check the recent certificate issued, that may have 15 days only. Go next. This is not much. Okay, this is a one more new development where bankers are insisting the promoters now to provide the CA certificate. Earlier, they used to take only one undertaking, standard undertaking. We will follow and comply with the RERA compliances. However, few of the banks now, they wanted the CA certificate to be handed over to the banker while withdrawing the funds. And I also heard that bankers are incorporating the mechanism of money withdrawn and withdrawable in their this RERA designated bank account module itself. Like they say that till last quarter you have withdrawn 17 crore 28 lakh rupees. Now eligibility is 19 crore rupees. So 19 minus 17.28 is only eligible to withdraw. So that is that mechanism these bankers are inbuilting in creating the small menu, so that the purpose of the act and also the content of the certificates are also included as part of their software. Next. Friends, as you know that like we completed the March and we are moving towards the next financial year, and we are closing the books of accounts. I'm sure that like having the similar information or the data across all the stakeholders are very important. I'm sure that many of you are following it. Just it's an effort for us to say that where all you will have this information of the RERA. Obviously, in case of a business management, they'll have a MIS of there, and MIS should follow a tally with your books of accounts or various documentation you share. Regulatory bodies, like in case if you have a listed company, SEBI will have it. In case of any other societies, so there is a societies, register of societies would be a regulatory body. So somewhere you will have this information to be submitted to them also. Ensure that what you submit to the RERA should tally with these financials or the documents. Lenders, obviously, to enhance the lending or to have the additional lending facilities, don't suppress or give any information which is not correct. And the government agencies, like wherein in terms of the permissions you wanted to take from the government agencies, please give the information which is as equally important as the which you submitted to the RERA also. Obviously, tax authorities, I need not to say that how tax authorities are taking the information and putting into the paper and a cover and sending a notice stating that as per RERA, your cost of the project is 28 crore 20 lakh rupees, wherein you are declared as my cost as 38 crore rupees, please prove it. So or the GST department come back and say that as per RERA, your percentage of completion is 53%. However, you declared only 28% to me. You pay the tax on remaining 25% because your GST liability based on the activity, that is like whatever be the activity of 53% completed, you raise the demand on 53. Whether you collect money or not is my headache. So based on the activity for the real estate, so please ensure that whatever you declare should match with the tally. Research agencies are also taking your report for the publishing. So based on this information, they also arrive at some reasonable prediction of the data. Obviously, investors would be giving the investments based on the data. Now that is visible on the RERA website. One can go and see that and call for the information also. Stock exchanges. So in case of the closures and all those things would be required. So this is the one letter which is written by the Gujarat RERA authorities to all the chartered accountants. They are insisting and asking them to be aware of the section 143(9) and 143(t) of the Companies Act, wherein standard of auditing SA, we call it as SA 250. Importance of laws and regulations in the audit of financial statements and the material risk of the SA 315. In one of the program or the event when I was participated, one is we have SA 250 is about the risk of the regulatory, wherein in case of the project is if the promoter is blacklisted, so entire project is at risk, entire business is at risk. Blacklisted in one state has impact on another state. So while issuing these certificates, please consider the standard of auditings which are issued by the institute and or under the Companies Act while issuing the certificate. Friends, I'm not much about this. I'm not much aware about these standards or the Companies Act. Just this is the something which is other authorities are issuing letter or the circular specifically to the chartered accountants. I'm bringing it to notice. Yeah, next, please go.
You also want to discuss the next page? I think this is basically.
It's also same thing where they say that like whatever you are giving it should be a proper factual evidence by the backup with the evidences. Next.
Okay. So I think with this we come to an end, almost an end. So next is, of course, the Real Estate Regulatory Authority has been hearing complaints and disposing of complaints, particularly the complaints where compensation is sought by way of delay period interest. Most often than not, if the allottee is able to place on record proof to say that the agreement has been entered into and the project has been delayed, then the authority is certainly entertaining such complaints and passing orders in favor of the allottees. In case of any other grievances that are brought before the authority by the allottees, then the allottee is going into the details of such complaints. In fact, many complaints where the allottees have filed complaints without there being enough material on record, the authority is dismissing such complaints. And authority is now extensively passing orders, and I would say that compared to earlier, the authority is now very active and is passing orders in a much faster way than it used to earlier. And in recent times, we have seen that in one particular project where the complaint is filed by the complainants, an order is passed, an interim order has been passed where the authority has taken cognizance of the fact that the development and building plans as well as environmental clearances in a particular project have been done by the promoter without adhering to the requirements under Section 14. So what Section 14 mandates is, Section 14 subsection 1 mandates is that Section 14(2) mandates is that when a promoter wants to make any change in the specifications in a particular unit, let's say a particular apartment, then the promoter should take consent from that particular allottee of that particular apartment. If there is any modification in respect of the entire project, then 2/3 consent has to be taken. So 2/3 consent also, let's say that in the agreement itself, you have included a clause saying that there is a consent. So that cannot be deemed as a consent unless, because Section 14 reads that notwithstanding anything contained in any contract or agreement, so the promoter shall not. So which means that the consent that is to be taken has to be an express and an informed consent, not a general consent. So in this case, the authority has passed an interim order directing that pending disposal of the complaint, all development work in a portion of the project which is being developed as per the modified sanction plans be stopped. And further, it has also directed that such a building which is being constructed in as per the modifications should not be occupied. So there is another, of course, I think there is another project where, in fact, the promoter had taken sanction for I think up to 6th or 7th floor, and thereafter by applying TDR, it had proposed to construct additional floors. Now, in those additional floors, the promoter has already gone ahead, allotted those units and collected money. However, as you know, because of the TDR issue getting delayed, the sanction also has not come. So now the authority has passed an interim order directing that none of the units in the entire project can be alienated by the promoter, because it has collected money and it is still yet to get the sanction for the building plan while it has gone ahead and put up the construction. So the issues that are coming up before the authority are getting much more finer and are becoming complicated. So which means that as promoters and as professionals, it is essential that when we are taking up a project as a promoter and as professionals, when we are advising our clients, we should make sure that we know the intricacies that are involved in the project, so that these consequences do not come upon the project or come upon the promoter. So with this we end our, I think we come to the end of the session. We can take questions. I don't know in the chat, are there any questions in the chat box, Vinay?
I received at least about 10 to 12 questions, and I've replied to them personally.
Okay.
They have sent the direct question.
Mhm.
So that is the reason. And also, those are all the questions which is most likely to their clients' questions, so have replied. So if anybody has a specific general questions, you can message us, or you can ask us, or you can write a mail to us. Our team would love to come back and share the reply to your specific questions. So one question, Mr. Rangaraju is asking, how serious in terms of non-compliance of following the agreement of sale? Suhail?
Yeah. So I don't know whether it is in terms of what happens if I don't execute the agreement in Form 8A, or I don't register the agreement. I'll take it as both. So it is a mandate under RERA now to follow the Act. In fact, Chapter 8, which deals with offenses and penalties, also has a penalty for non-adherence to the provisions of the Act, rules and regulations itself. So first of all, you are not permitted to violate the Act, the provisions of the Act, rules and regulations. So which means that when you are not signing the agreement as per the format that is notified, then you are violating Rule 8A. If you're not registering the agreement, then you're violating the provisions of Section 13. Anything else that you do by including either clauses which are not as per RERA, then you are violating the provisions of the Act. So it is quite serious, so to speak. You may not understand the impact of it while doing it, but if at all there arises a problem, and as we see more often than not now, the allottees are much more informed, and it is likely that they are going to come up an object. And particularly if you take in context of Bangalore, Bangalore has a different, I would say, the consumerism is much higher in Bangalore in terms of the actions that the consumers take. So it is not advisable that you don't follow the form of the agreement, or don't register the agreement, or make changes in agreement which are not in consonance with the Act.
Okay.
Yeah.
One thing which I also wanted to share you, friends, this is a recent thing which is issued by the department, which is given to all the state authorities, where they're making this real estate agents, which covers under the Prevention of Money Laundering Act 2002, dated 17/22. So there is something which is related to the real estate agent, wherein they wanted the authorities to remind real estate agent to maintain the KYC documents. So this is what is the guidelines on anti-money laundering standards and combating CFT. Okay, obligation of real estate agents under the Prevention of Money Laundering Act to maintain some of the KYC documents of all the customers who have paid the money. So I just wanted to highlight it, like maintaining of KYC documents are very important, and that is what the one of these recent central government circular or the communication to all the authorities, wherein agents are brought under PMLA in case if they are collecting the money and also uh, related to the real estate transaction. Yeah. Okay. Any other questions, friends? If you have any other questions, you can free to ask. Otherwise, like now it's 5:21 and we can wind up the session. Okay, there are no more questions, and thank you so much for your patience hearing, and looking forward to have similar session in the future. Thank you so much, friends.
Yeah, thank you all for participating, and we look forward to your participation again in the upcoming monthly sessions. Thank you.
Thank you.
Okay, thank you, Vinay sir. Thank you, Suhail sir, for spending your valuable time with us. Thank you all registrants who have spent their time with us, and we look forward to have your participation in future events also. Also, if you have any idea and if you have any clue about about our upcoming sessions, so you can write to us, and you can go through our website and you can contact us. Thank you so
That
much,
is,
and have a
Shweta, let me clarify. Any idea in the sense, any suggestions on topics?
any
is it?
suggestions? Yes, sir.
Okay,
Any
okay. Any
with
suggestions on
respect
topics? Okay.
with respect to the topics
All
on
right.
RERA and
All
GST,
right.
please write
All
to
right.
us at
All
our
right.
email ID. Yes, sir. On our
Okay.
email ID, that is rerapromo@reraconsultants.in or sales@reraconsultants.in. And
Okay.
thank you so much. Thank you, Suhail sir. Thank you, Vinay
Thank you.
sir, for
Thank you.
having your
Thank
time.
you.
Thank
Thank
you
you,
so
Shweta.
much.
Thank you, Shweta.